Hello friends. Topic for today's discussion is accounting concepts, conventions and principles. Basically, accounting concepts, conventions and principles are general rules, guidelines, ideas at mental level and method of procedure which are adopted for recording and reporting business transactions. Generally, the term accounting concepts, conventions, and principles are used interchangeably. It means they are one and the same. So basically, the accounting concepts, conventions, and principles are general rules or guidelines for the preparation and presentation of financial records. Right. So these accounting principles and conventions or concepts are very important because see, the financial statements prepared by various organizations give information about the profitability and financial position to the investors, creditors, and government agencies and other interested parties as well. To have general acceptability, uniformity, and consistency in accounting records, it is necessary that records are based on certain rules, guidelines, principles, and concepts. Right. So, because of this, these basic accounting concepts, conventions, and principles are very important while recording a business transaction. Right. Now, let us move on the first important accounting concept, that is business entity concept. As per this concept, business and the owner of the business are to be treated as two separate entities while recording a business transaction. Right. So as per this principle or this concept of accounting, the business and owner of the business are two separate things. Right. Every transaction that is recorded in the books of account is always considered from business point of view. Right. For example, when a person as a owner of business brings in some money as capital into his business, it is treated as liability of the business, right? Similarly, when the owner withdraws any money or goods from the business for the personal use, it is treated as drawings and subtracted from the capital of the owner, right? So as per this concept, we have to treat the business and the owner of business as two separate entities, right? The personal assets and liabilities of owner are not recorded in the books of account of the business, right? So personal assets and liabilities of the owner are separate and the assets and liabilities of the business are separate, right? So because of this concept only, we treat the capital given by owner as a liability to the business, right? And when owner withdraws money or goods for the personal use, these withdrawals are treated as drawings and subtracted from the capital of the owner, right? So this is one of the important concepts in the account. Now let us move on the second important concept in the account. Second important concept is money measurement concept. As per this concept, only those transactions which can be expressed in terms of money are to be recorded in the books of account. All other transactions which cannot be expressed in money terms are not recorded in the books of account, right? So as per this concept, even rupees spent is recorded. That is the transaction which have monetary consideration needs to be recorded in the books of account, right? So even business spent a rupee, it must be recorded. But those transactions which do not have monetary consideration are not recorded, like honesty and skills of employee, are not recorded in the books of account, right? It has been observed that the honest and skillful workforce is basically asset to the business organization. But as per the money measurement concept, the honesty and skill of employee are not recorded in the books of account because we cannot calculate the monetary value exactly. Okay, so as per this concept, only those transactions which can be expressed in terms of money are recorded in the books of account, right? Okay, now let us move on the next accounting concept, that is dual aspect concept. So as per this concept, every business transaction has dual effects. Dual with two effects. Hence, it is recorded at two places. Right? We know that in accounting, every debit has corresponding credit and every credit has corresponding debit. Okay, so as per this dual aspect concept, every transaction is recorded at two places, and because of this, the accounting equation, that is assets is equal to liabilities plus capital, is formed basic. So this is one of the important concept in the accounting, that is dual aspect, right? Now let us move on the next accounting concept, that is periodicity concept or accounting period concept. As per this accounting concept, financial statements are to be prepared at regular intervals. Okay, so this concept of this principle requires that financial statements should be prepared at a regular interval and normally for every year. But in certain cases, as per the rules and regulation, financial statements can be prepared quarterly as well. So we know that all the listed companies required to prepare their financial statement for every quarter, right? So as per the periodicity concept, financial statement are required to be prepared at regular intervals, right? This is simple concept.